Both Nvidia and AMD are companies that are involved in the development of hardware for AI applications, and they are both very, very popular stocks. So today we want to take a look at which chart is actually the stronger one. Is there still another all-time high on the horizon? So let's go. Yeah, hello and welcome to another market update by MCO. My name is Ben, and today we want to take a look at these two charts. Nvidia, market leader in the field of AI, absolutely, yeah. Chips, development of hardware for AI applications. A clear market leader, was one of the best performers in 2024. Absolutely mind-blowing performance over the last few years as well. AMD as well, but AMD has started a larger correction possibly, and it is one of the stocks that we're covering in our stock service regularly. We've been focused on this correction for the last 9 to 12 months, and AMD has been in a correction for the last year or so. The question is this correction nearly over? In which chart is actually the stronger one? So we'll take a look at that right now. I would say we start with AMD. This here is the larger degree chart, the larger time frame chart that you see on the screen here. The idea is currently that a wave 2 bottomed here in 2015, and we could indeed be in a larger degree third wave rally. What we want to focus on today is just the correction here, which probably started, yeah. The thesis is that a wave 1, a large completed wave 1, or a large wave 1 completed here in February, I think it was, March 2024. The move to the upside, you can count it as a 3-wave move. You can count it as a 5-wave move. I'm showing it here as a 3-wave move because in the yellow scenario, this here is counted as an ABC structure. I don't want to get too much into detail. I just want to say that because some of you might say, hey, but a wave 1 over wave 3 cannot be a 3-wave move. That's correct. But there are different ways of interpreting this. This video isn't so much about that. I want to dive into this and tell you what is around the corner, right? The correction that's currently playing out. You know, this is not so much a tutorial. We really want to see what is likely unfolding right now, because the current thesis is that a correction is unfolding. So if we make that a little bit larger, then you can see that a correction started to unfold actually in March. In March 2024, that was around $225. Since then, the market has been in a decline, in a correction. And typically corrections from an Elliott Wave point of view are, well, 3-wave movements, right? Okay, it could be a triangle, could be something different, but in this context, it's most likely an ABC structure, which would be a 3-wave move. And this would be the A wave. Then we will probably get a B wave soon, and then a C wave to the downside in a large correction. And we can't really calculate a target for this C wave until we have the B wave top. The focus here on this chart has been for the last few months always on further downside. So we had some good short trade setups. I think we're now getting to the point where this A wave to the downside is nearly over. I think it will still go down a little bit lower, and we will talk about that. But overall, this here is seen as a 3-wave move down in an A wave. Now, A waves can be 3-wave movements and 5-wave movements. Expectation would be that it's a 3-wave move because these typically are, in most cases, actually 3-wave movements. That also tells us that this correction is likely not over yet, not the overall correction, even though there can be a decent bounce in wave B. What I want to share with you today is just some standard support levels you can watch for. Whether this is a B wave pullback or a wave 2 pullback, the support area is the same. So some standard support levels are $34, $19. These are the next ones I would focus on, which is realistic if we assume the A wave can go down a little lower. I mean, if you say that's impossible, I mean, just consider it already dropped from around about $225 to $100, okay? And it's likely not over yet. As I said, we need to see the structure of wave B before we can really determine where it will go to this wave C. But the idea is that a correction is not over yet. I want to now take a look at the smaller time frame. But before we do that, actually, that already tells you that the correction has been unfolding for a year. It's likely not over yet. That might mean it will likely carry on for some more not only months, but maybe even years. If you consider the length and duration of the rally to the upside, you see it started in 2015. Well, pretty much 9 years to 2024. Okay, so the correction, if this is really a B wave or wave 2, I could be wrong about that, but that's the current assumption. It certainly has been working for a year, that assumption. Then, yeah, we might see a few more years of correction. But even in corrections, there are opportunities. Like, for example, at the end of the A wave, there could be a decent bounce in wave B to the upside. Now, let's take a look at the daily time frame for AMD to see where are we actually in this overall correction. And you can see that I'm following two pathways here. Basically, it's the same scenario, essentially. The idea is this is an ABC structure to the downside. That C wave could still extend a little bit lower. Yeah. A C wave is a 5-wave move, and we've already seen waves 1, 2, 3, possibly. And I'm ready for a wave 4 bounce before the final dip. This doesn't quite look complete yet. It might need another low. Question is, do we get another low or 2 more lows? Because the white count allows another low in the 3rd wave, whereas in the yellow count, we could already be in the larger 4 and 1 more low in 5. That still leaves it as a large 3-wave pattern to the downside, which could lead possibly to a test of the probably low $80 area. We can actually put that onto the chart as a target. The way to do that, quick educational moment here, we take the length of the A wave down, and we go to the high of the B wave, and you can see that we've already nearly reached the 100, we have reached 100% extension. That's always an ideal target for a C wave. But going lower, 1 more low could take it to the 123.6 extension. Common target as well, $81. I'd be happy about that, or even 74. Okay, so what does that mean? It means that as long as the market now stays below resistance, and yep, I've got an immediate lower resistance, $105.87. That's really just micro resistance. As long as we stay below resistance, the focus remains on further downside. The upper resistance would need to be broken here at $123.50 to indicate that the A wave has bottomed, but that would not be the expectation at this stage. But with any analysis, you get the levels where we have to say, okay, here we have to change our opinion, and that would be a break above that $123.50 level. So that means correction still unfolding, but once it's over, there could be an opportunity to trade the B wave. Now, to trade B waves is tricky, but this could be quite a substantial one, okay? B waves are the most difficult waves to predict, to track, and trade. Now I want to share with you the Nvidia chart, which looks a little bit different. Yeah, it looks a little bit different. If we go also to the 4-day chart, this is a chart that also started a rally many, many years ago, but a little earlier. So actually, it's a completely different chart. We can say that a major 3rd wave, actually started already 2002. It is much more impulsive to the upside. The chart overall looks stronger, I have to say, just visually, because the AMD chart isn't moving up hasn't moved up in a very aggressive and impulsive fashion. However, that also means that a correction is likely around the corner, because we have seen a series of extended wave 5s in this entire rally. So we have here, let's say, always structures of 5 waves. I encourage you to watch our tutorials on this channel, but this 5th wave was quite extended, and this 5th wave is also an extended one. Not super extended, can still go higher, but it's definitely, I would say I should never say definitely, but let's say, I'm always encouraging people to think about it in terms of risk and reward. And the high probability element of that rally is likely done. It's due a correction. And that correction can be an opportunity for especially long-term investors, I think. This chart is overall in a good condition, but it's now very much overstretched. And we're getting the first signals that we get some weakness in here. And the idea is that this wave 4 is around the corner. That could be, yes, it's a wave 4. It's not a wave 2 as on the AMD chart, but it could still be substantial because it's a different wave degree. It is the entire 3rd wave rally, probably, that started in 2002 and maybe already finished. Maybe we get another high that will likely be corrected. And from an Elliott Wave point of view, there are guidelines that say typically, such a wave 4 of one here, the larger wave 4, it could finish in the area of wave 4 of one lesser degree. Well, here we talk about $15. Is that realistic? Again, it is a massive wave degree, and it would probably match in proportion this wave 2, which was at the time a correction of around about 90%. Now, the wave 4 doesn't need to correct 90%, but it can be very, very substantial. It could technically be a sideways correction, but even if it's a sideways correction, it could easily correct down like 70, 80%. This is due, okay? This is due. I'm not saying it started yet, but this is due and it will happen at some point. I mean, just look at this wave 4, which was the smaller degree, yeah? That happened, and people forget about this, but this happened in 2021, and it corrected around 67%. And this will be a larger wave degree, so it will be more profound. So that being said, if we compare both charts, both are long-term probably bullish as far as we can see. Both are current. Well, AMD has already started the correction a year ago, so might finish it a little earlier. But it is still probably, yeah, it will probably still take some time. But on the AMD chart, there's probably that B wave rally around the corner. On the Nvidia chart, I'd say, surely there could be some upside in the short term. We'll take a look at that. But a much larger correction is around the corner. That is a much larger wave degree and could lead to a substantial correction, given that this third wave has taken decades to develop. Yeah. So this is something to be aware of, not to scare anybody, but you need to understand about reward and risk and consider the risk on the macro level. Okay, on the micro level, if you're trading this intraday, you don't care, right? That doesn't really matter. But from a macro point of view, I think it does matter that probably most of this rally is done before a larger correction is around the corner. That also means that corrections can really be opportunities. Yeah, so it's not a chart that is bad or weak or anything. It's a strong chart that hasn't clearly started that larger correction yet. Believe is still that it is around the corner. Here, all I can say is that I'm quite neutral about whether we get another high in the short term or not. I can't move that for some reason. But the thesis is currently that in the yellow scenario, this is here just the 4-day chart, we could get another rally in wave 5, for example, possibly to $160 to $184. In that case, this larger degree correction here, which is an internal fourth wave, is still unfolding as a flat correction, which might have bottomed. It's not so clear. Yeah, I mean, this is really, we don't want to get too much into micro counting here, but my view is that there is still a chance for another high, but I would need to see a decent setup on the smaller time frame, which we don't have. Probabilities for another high, I would say, reduced if there is a sustained break below the September 24 low, which formed here around $100. Yeah, and especially if we see further downside, then if the next rally is just corrective, it might have already started this correction that AMD is already working on. Yeah, AMD is already working on that. You could say if we compare these, AMD is already somewhere down here. Okay, so just to give you a feel, it's not exactly correct, but just to give you a feel. So yeah, overall, be ready here. I don't see, and that's important, while we can get higher prices here still, I think this is overall a range that's happening here right now. And even if we get further upside, it might just be the last one, the last rally. And there's no high probability long trade setup. Surely there's some support around $100. There is micro Fibonacci support at $108.50 to $115.67. But this is not really based on, like, let's say, a high probability Elliott Wave count or something. So I just wanted to give you an idea of the macro. Yeah, if you're really interested in the daily micro updates or really short-term updates every few days, then check out our stock service. But I think it's important because these stocks are so popular that you understand about the broader context. Okay, and there is currently no high probability setup here on the long side. We could still get higher prices. You can use these Fibonacci support levels, absolutely. Just be aware the $100 mark is just below. That's a support level. That's not necessarily an invalidation point. This here is a wave 4, which is always difficult to trade. That is what Elliott Wave tells us. We know that, characterized by a lot of fake outs. And you need to understand that these wave 4, 5 patterns are difficult. They're just difficult to trade. The easiest element of trading happened here. Well, it was the third wave. Yeah, the third waves. Those are typically what the Elliott Wave traders want to be involved in. So what we're waiting for here is either a clear long trade setup at the moment or a clear short trade setup. Either way, I think the chart will reveal it soon, and then there will be a tactical answer. Always think about what is the tactical answer at the moment. I think on the macro level, it can make sense here on the Nvidia chart to scale down a bit. If you want to trade the range, you can of course do that. There is no impulse here at the moment that would be attractive from an Elliott Wave trader point of view. But maybe you have your own strategy, your own tactics, and then you can just integrate this wave count into your trading plan. So one last thing I wanted to show you is the next Fibonacci support levels, because if the yellow scenario is indeed true, and this is an A wave down, a B wave up, and we're now in a C wave down, then we can add some standard Fibonacci support levels. These are just standard support levels where the price might react. Even if we go down lower, it could still technically be just a wider wave 4. Yeah? It will probably not be revealed whether we get another high or not until we see the next larger rally, which could then be a B wave in the white count. And if that's corrective and choppy, and we see 5 wave movements to the downside, those will be strong indications a major top is formed. I'm on the lookout for major 5 wave movements to the downside, or any 5 wave movements to the downside. At the moment, this could simply be the C wave, but the move down looks still corrective. So as I said, I'm fairly neutral about whether we get another high or not. The chart at the moment doesn't reveal the answer to us, not yet. It will probably happen soon, and I'll keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. Also make sure that you follow us here on this channel. Activate the notification bell if you're interested in updates about the NASDAQ, S&P 500, ES futures chart, regular updates about AMD, Nvidia. Check out our stocks membership. The link is in the description. Have a great day. Thank you very much. Bye-bye.